So, which is your view of the stock market, both in the US and the European markets?
In the U.S., we're in a situation where stock prices have gone sideways for a number of months. Volatility has come way down, and we are in a situation which we call compression. A lot of energy is built up in the stock market. Many people are forecasting a major decline, but I don't believe this. When you look at the internal indicators of the market, they're all still behaved very well. So I think that the most likely result is that we have a rally, perhaps until later in the year, maybe the early fall, something like this. And then there may be a bigger possibility of a decline, but that's not, we can't see that yet. One of the very interesting things is that we're having a lot of what we call rotation. That is, different market groups, industry groups, different sectors, economic sectors of stocks, and different styles of stocks are coming in and out of leadership. For instance, right now, large cap stocks are coming into leadership, and we've had a fairly strong correction in small stocks, 10% already down in small stocks. We call this a rotational correction, and it's a good thing in that it works off the overbought condition that was built by the prior rally without stock prices going down straight. So it's we're in the middle of a rotational correction. We've been going sideways, and I think that the odds are that the next move will be up, and after that we'll have to see.
Yeah, but you told about the rotation between small and large cap. Do you also saw something about the sectors which are certainly which are lagging?
There's been a lot of sector rotation. I think the most interesting thing right now is basic materials and basic industry appear to have stopped rotating downward and are actually turning up. Interest is building up in this area. This, if it happens, would be very interesting because this would be a forecast for an improving economy. As you know, we've had very little growth in the U.S. for some years now. It's almost for almost 6 years, GDP growth has been less than population growth. So it's a big problem for us. So if this trend toward basic industry, metal fabrication, classic basic materials sorts of stocks continues, and then it could well be a forecast for an improving economy. No evidence of that yet, but it's just starting and something we're watching.
And which are the sectors on the other hand that are lagging?
The most important sector that's lagging is smaller stocks. It's not an economic sector. The most important downtrend we see now is in small stocks, especially the micro cap stocks, the very small stocks. They're already down more than 10% from their peak. And what we look for now is for them to stop going down and build a base and try to turn back up. No evidence yet, but that's what we look for.
Yeah, okay. So it's not going to be a bear market for small stocks, but just a correction?
It's what it looks like so far. What we do is we monitor what we call the market internals. We look at the stocks that are making new yearly highs and new yearly lows. We look at the stocks that are going up each day versus the stocks that are going down each day. And then we do the same thing on a weekly basis. Each week we count the number of stocks rising on the week and the number of stocks falling on the week, the number of stocks making new 52-week highs, the number of stocks making new 52-week lows. And these numbers are quite good. They're quite robust. They're still quite strong. So there's no indication of a real bear market in what we say the market internals. Just not yet.
Yeah, okay. And what about the European stock market?
I think Europe is looking. Europe's in a very interesting place because it is very low growth in Europe, and Europe looks to Asia on one side and to North America on the other side for growth. Because if these markets start growing, European exports will start growing, and get some more interest in some more economic impetus to help drive the European economies. Like in the U.S., the sorts of economic growth policies that would be successful, you don't see in place, and we don't see them in the U.S. either. So it's I really don't understand, but it's almost as if the leaders are happy with slow growth.
Yeah.
I don't really understand this, but.